Margaret Thompson, a 67-year-old retired teacher from Ohio, nearly dropped her coffee cup when she opened her bank statement last month. Staring back at her was a deposit of $8,400 that she wasn't expecting. After 15 years of receiving reduced Social Security benefits due to her teacher's pension, she suddenly received what felt like a financial miracle. Margaret's story isn't unique. She's one of millions of Americans who are discovering unexpected deposits in their bank accounts. And if you're receiving Social Security disability insurance or supplemental security income, you might be next in line for a similar surprise. If you've been following the latest developments in Social Security, then you'll want to like this video and subscribe to the Golden Money channel for the most up-to-date information on benefits, payments, and financial news that directly affects your wallet. The reason behind these unexpected deposits traces back to a significant change in federal law that's been quietly transforming the lives of millions of Americans. For decades, certain groups of people, particularly government employees, teachers, police officers, firefighters, and postal workers, faced unfair reductions in their Social Security benefits to specific provisions, known as the windfall elimination provision and the government pension offset, essentially penalize these hardworking Americans for having earned both a government pension and Social Security benefits during their careers. Think about it this way: if you worked 20 years in the private sector paying into Social Security, then spent another 20 years as a teacher or police officer, you earned both benefits fair and square. Yet these provisions reduced your Social Security payments simply because you also had a government pension. It was like being punished for working two jobs and contributing to both systems throughout your career. The Social Security Fairness Act, which became law earlier this year, completely eliminated these unfair penalties. This monumental change affects approximately 2.8 million Americans who were previously seeing their Social Security benefits reduced. The law doesn't just apply to future payments, it works retroactively, meaning people are receiving lump sum payments to make up for the money they should have been getting all along. Let's break down what this means in real numbers. Through March 4, 2025, SSA has already paid 1,127,723 people more than $7.5 billion in retroactive payments. The average retroactive payment so far is $6,710. However, some individuals are receiving much larger amounts, particularly those who have been affected by these reductions for many years. Consider the case of Robert Martinez, a retired firefighter from California. Robert worked 25 years in private industry before becoming a firefighter for another 25 years. Under the old rules, his Social Security benefits were reduced by nearly $500 per month because of his firefighter's pension. Not only is Robert now receiving his full Social Security benefit an additional $500 monthly, but he also received a retroactive payment of over $12,000 to cover the reductions from the past several years. The implementation of this law has been a massive undertaking for the Social Security Administration. The law requires SSA to adjust benefits for almost 3 million people. Since the law's effective date is retroactive, SSA must adjust people's past benefits as well as future benefits. This complex process involves recalculating benefits going back to December 2023, which is why some people are receiving substantial lump sum payments. For those receiving Social Security disability insurance or supplemental security income, the impact extends beyond just the Social Security Fairness Act. Social Security and Supplemental Security Income benefits for more than 72.5 million Americans will increase to 0.5% in 2025. The 2.5% cost of living adjustment (COLA) will begin with benefits payable to nearly 68 million Social Security beneficiaries in January 2025. Increased payments to nearly 7.5 million recipients will begin on December 31, 2024. This cost of living adjustment means that even if you're not affected by the Social Security Fairness Act, you're still seeing an increase in your monthly benefits. For someone receiving $1,500 monthly in SSDI benefits, this 2.5% increase translates to an additional $37.5 per month, or $450 more per year. The timing of these payments has been carefully orchestrated by the Social Security Administration. Social Security urges beneficiaries to wait until April to ask about the status of their retroactive payment, since these payments will process incrementally into March. Since the new monthly payment amount will begin with the April payment, beneficiaries should wait until after receiving their regular monthly benefit to inquire about any additional payments they might be expecting. Mary Johnson, a disability rights advocate, explains the significance of these changes for many people living on fixed incomes, particularly those receiving disability benefits. These unexpected payments represent more than just extra money, they represent dignity restored. Many of these individuals have been struggling to make ends meet, and suddenly receiving thousands of dollars can be life-changing. The process of receiving these retroactive payments has been streamlined to ensure people get their money as quickly as possible. Any beneficiaries who receive a retroactive payment or a monthly benefit adjustment will receive a mailed notice from Social Security explaining the change. This notice will detail exactly why they received the payment and how it was calculated. It's important to understand that these payments are not taxable windfalls or one-time stimulus payments. They represent money that individuals were legally entitled to receive but were denied due to the now repealed provisions. In essence, the government is correcting a decades-old injustice and paying back what was rightfully owed. The ripple effects of these payments are being felt throughout communities across America. Local banks have reported unusual spikes in large deposits, with many customers initially worried that the payments were mistakes. Financial advisors are seeing increased consultations as people suddenly find themselves with substantial unexpected funds. James Wilson, a financial planner in Florida, shares his observations. I've had clients come in with these large deposits, initially thinking there was an error. Once we explain what's happening, the relief and joy are palpable. Many of these folks are finally able to pay off medical bills, catch up on home repairs, or simply have some financial breathing room for the first time in years. The Social Security Administration has been working around the clock to process these payments efficiently. According to the Congressional Budget Office, beneficiaries will see an average monthly increase of $360. This substantial increase in monthly benefits will continue for the rest of these individuals' lives, providing long-term financial security that many thought they'd never see. For those wondering if they might be eligible for these payments, the key factor is whether you were previously affected by the windfall elimination provision or government pension offset. If you worked in government service as a teacher, police officer, firefighter, or other public employee and also paid into Social Security through other employment, you may be entitled to both a retroactive payment and increased monthly benefits. Going forward, the implementation timeline has been aggressive but necessary. Starting the week of February, is due retroactive benefits as a result of the Act. They will receive a one-time retroactive payment deposited into the bank account SSA has on file by the end of March. This rapid deployment ensures that people who have been waiting years for fair treatment don't have to wait any longer than necessary. As we move through 2025, these changes represent the most significant positive development in Social Security benefits in decades. For Margaret Thompson, the retired teacher we met at the beginning, this unexpected deposit allowed her to finally get the dental work she'd been postponing and set aside some money for her grandchildren's education. For Robert Martinez, the retired firefighter, it meant the difference between scraping by and living comfortably in retirement. The key takeaway is that if you're receiving Social Security benefits of any kind, whether retirement, disability, or survivor benefits, and you have a history of government employment, you should be monitoring your bank account and mailbox closely. The Social Security Administration is working diligently to identify and compensate everyone who was unfairly penalized under the old system. This historic correction of a long-standing injustice reminds us that persistence in fighting for what's right can eventually pay off. Millions of Americans who dedicated their careers to public service are finally receiving the full benefits they earned through their hard work and contributions to our society.